to some global stories we're tracking for you this morning then. And Federal Reserve Bank of Chicago President Austin Goolsbee said data showing slower US inflation is fabulous news, but he hasn't yet decided on whether to support pausing interest rate increases at the next policy meeting. The Fed's goal, he said, is to stick on the golden path and get inflation down without causing a recession. In addition, he also said that he hasn't made up his mind about whether to raise interest or stop hiking at the September meet.
And on some earnings, Amazon will be reporting their earnings, and ahead of the key earnings, the investors will be closely watching the updates on Amazon's cloud business as well as the revenue, and they signal towards the consumer health as well as inflation, which continues to impact the spends. Peers such as Microsoft as well as Google, they both reported slowing growth in their cloud business in the quarter gone by.
And ExxonMobil, in a move to expand beyond fossil fuels, is in talks with Tesla, Ford and some other automakers to supply lithium for electric vehicle batteries. According to Bloomberg Law, the oil major is also holding discussions with Samsung and SK on company. The talks are at an early stage, and Exxon has not yet laid out its plans for diversifying into lithium operations.
And in some more important news we are tracking this morning, China has announced export controls on some drone-related equipments amid efforts to safeguard the national security as well as their interest. And this announcement that comes amidst the escalating tension with the United States over technology access. Well, the said restriction will take effect on September 1st.
And Tiger Global has now exited Flipkart with mega returns, selling its equity in the e-commerce company to Walmart. My colleague Sumita has more details on this. Sumita?
New York headquartered investment firm Tiger Global informed its limited partners last week that it has completed its exit from Flipkart, fetching a total of $3.5 billion in total gains over the past few years of a phased sell-off. Sources have informed TT. In fact, Walmart has paid $1.4 billion to buy out that investment in the e-commerce firm, after which its valuation has soared to nearly $38 billion. And Walmart now holds a whopping 72% stake in Flipkart. Now, speaking of Tiger Global, sources have also told ET that this is amongst the most it has generated from a single company globally, and also the highest profit it has managed from an Indian internet firm. Tiger's overall gains from Flipkart will rank amongst the highest cash exits for the fund, with its most successful investment being in Chinese e-commerce giant JD.com, where it pulled out $5 billion after pumping in nearly $200 million. Seeing the potential of e-commerce in China, Tiger decided in 2009 to pump $9 million into Flipkart at a valuation of $42 million when the startup was just an online bookseller. But most of the $1.2 billion deployed by Tiger in Flipkart came after 2015, when the company hit a rough patch and was unable to shore up external funds. But the question is, why did Tiger Global decide to sell its stake? Well, coming off a turbulent 2022 due to crash in technology valuations across public and private markets, Tiger has been selling big portions of its shares in portfolio companies. In India, it's exited listed logistics company Delivery and online insurance marketplace PB Fintech, while partially selling its stakes in food delivery major Zomato. However, the investment firm does remain bullish on India, particularly on India's internet story.